This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets and the SPY technical analysis for October 9th, 2025. And with that said, let's go ahead and hop into tomorrow's data. Now, just quickly going over the data for October 8th. We had a couple Fed speakers. I did not get a chance to look at any transcripts or anything, so I'm not sure what was said or not. But the 10-year auction came in slightly higher with the yield. We did talk about that being a potential possibility, so there we go. Now, tomorrow is a very, very, very big day. We have the jobless claims, which, that is a weekly data set, but it's an extremely, extremely key data set right now. The expectation is for it to come in slightly higher. Pretty much any number moving upward from here is bad. So, if this goes up higher than the print from here, then, that's going to very, very heavily affect the market. I've talked about this before, but if this gets above 2 million, that's really a danger sign for the labor market. Let's see. Fed Chair Powell is speaking at 8:30 a.m. I'm not sure exactly what he's speaking about, but seeing how there's been a ton of Fed speakers this week, I'm sure they're just, having a large sort of Fed speech type thing where every day different speakers go on. With that said, the market is pretty much going to be moving based on what Powell has to say. If he's extremely dovish, then we can expect the market to move upward quite a bit, as right now the labor market is still a major concern, but a lot of the equity bulls, a lot of the stock bulls aren't really paying attention to that too much right now. They're more focused on if the Fed is going to cut rates and if they're going to do deeper cuts. So potentially a dovish Powell tomorrow can make the SPY rally, but if he does talk about the labor market deteriorating more and that's a higher concern of theirs, then potentially that could pull the market down. So just be aware that Powell's really going to shift the direction of the market tomorrow quite a bit. Now, with that said, Vice Chair Barr, I don't really care about what he has to say too much. There is the 30-year bond auction tomorrow at 1 p.m. That's going to be very, very important. Now, there is also, let's see, Bowman speaks later in the day, Fed GDP. We know that the Fed GDP came in slightly higher, so this report should also mimic that unless something Powell says it changes that outlook. Now, again, Friday is a very, very, very key day for data, but again, Thursday, tomorrow is extremely key as well. So, just be prepared for a lot of volatility between Powell speaking, and obviously he's speaking earlier. I don't know if his speech is going to be done by the time markets open. I'm not entirely sure. Sometimes his discussions take a couple hours. Sometimes they're done in 10, 15, 20 minutes. So we'll see. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And quickly going over the SPY technical analysis. As always, let's go ahead and look at our Bollinger Bands and our moving averages. Now, the market closed at 630, it closed at 673.11, and the 5 mile is currently at 670.45. So we did talk about how the market was testing the upper bounds of the 5 mile and the lower bounds. So far, they are pulling upward towards that upper Bollinger. So with that said, the market closed at 673. The 5 mile will very likely be around 671.20 by open tomorrow, give or take. Just make sure you mark it down. That means the upper bounds of the 5 mile is essentially around that 673. The lower bounds is around that 669. Okay. That still means that currently with where the market is right now, we are still within the 5 mile. This is not a full-on bounce. This is not saying that, we can't head back down. Okay. We're we're above the actual 5 mile level itself, above the upper bounds very slightly, but even with the overnight right now, we're within the upper bounds of the 5 mile. And not even by a whole lot either. I mean, meaning we're not a whole range above that upper bounds, I'm saying. So potentially, you know, it's not fully set that we're heading to the upper Bollinger yet. Now, the upper Bollinger is at 674.38. So technically, we are at that very dangerous area, which I've been discussing for quite many months now, where if it's sort of like in this range where we don't close above the upper Bollinger to trigger that, upper Bollinger mechanic, but we don't close at the 5 mile. We close in between the two ranges. And generally what that turns into is rejecting the upper Bollinger and heading down. That's kind of how we've gotten these last two rejections. Was exactly through those mechanics. We were expecting the upper Bollinger potentially to move upward further. Instead, they pull down into the 5 mile, retest the 10 mile, retest the 20 mile. So potentially, if the market does want to have a quick sell-off tomorrow, then that 20 mile is very much within range. It's currently at 663.59. It'll very likely be around the 663.80 range tomorrow. So very well within range for a quick sell down. If we do have that sell down to the 20 mile, just remember, this is where you set up straddles for about 3 months out. Now, I know not everybody following me can afford straddles for 3 months out. If you can't, then try to take it for at least a month to 2 months. There are different symbols. You don't have to play just SPY. There's TQQQ, there's SQQQ. I'm not going to recommend SOXS right now because that has just absolutely toasted us. There is SOXL, where you could take a SOXL put and a call. There are different options where it's not going to cost you your entire portfolio to set up. And that way you get a guaranteed move because from the 20 mile, either they're going to start pushing back up towards the upper Bollinger or they're going to break down towards the lower Bollinger. That's kind of just the in-between range. So again, just very quickly on the daily chart, the upper Bollinger is not fully set in stone yet, but if we have another strong buying day from here, very likely we will see a close above that upper Bollinger tomorrow, as the upper Bollinger is literally only $2 away. If we don't see that level taken, and if we don't see the 5 mile, really tested into, then potentially we can have a very large rejection down to the 20 mile. Okay. Now, we did have one of those rejections where it only went to the 10 mile, so just be aware of that. If you start seeing it bounce at the 10 mile level, then potentially we're having that exact same type of movement where right in here, they barely touch the 10 mile and off they go. I know many have been saying I'm super bearish and everything, but just focusing on the reality of the situation just a little bit. We are in a very large buying channel. Okay. So pretty much right now, any major dip is being bought up. We've been discussing this within the 20 mile moves, how they have only been under the 20 mile for maybe an hour and a half or these really big selling days. And that's not normal. And that's the reason I was truly bearish, was these support tests aren't standard. Okay, a standard support test is more like within this range where you have large ups, down, up, down, up, down. Or even within this rally, they were still having support tests. Within the rally over here, still support tests. So this rally is a little different from, the standard. And some people get upset at me based on my decisions, but at the end of the day, I won't apologize for um, some of the callouts I've made. I know that might sound cocky or something, but I don't mean it in an egotistical way. Uh, Everything I do is back tested. I am not just gambling and throwing away money. Uh, this is just a market where if we're going to be shorting, we have to accept that, we can't really push down to the lower Bollinger. We can't expect some major selling channel to form. Sorry if you can hear my daughter screaming right now. She's not happy. She's getting out of the bath. Anyway, with that said, uh, I always stand by what I do, because that's what you have to do as a trader. And if it's wrong, then you have to make adjustments. But every single shorting opportunity here has been absolutely correct. The only difference is that many of us, including myself, I have been very, very, very down from this rally. Let me tell you, I'm down more than most people can imagine right now, and it's absolutely brutal. It's hard to even have a smile right now. Um, Very, very, very depressing to deal with when your back-tested mechanics somewhat fail you, and it's not that they failed me, it's that I failed the 20 mod test. Each 20 mod test should have been me taking very heavy straddles for that potential upside, not expecting this to really break down. And so, that's what I do take fault on, is that I expected and anticipated a lot more selling within this rally than what we've seen. I mean, this rally is setting some records, obviously for all-time highs, but for consecutive, just pure buying days without a 3% sale day, um, we're already within the top 2 or 3 rallies, I believe. So this isn't standard. Um, it's been a very large learning curve to not have a very strong support test within here. So that's why I say I'm not saying that out of like being egotistical. Uh, there's nothing I'm having an ego about here. I have been very, very, very badly burned in some of my positions here. A lot of it has been due to my fatigue. Um, some days I literally can't wake up. I can't even function to press my trades on my phone. And, we've had Soxus move down consistently 10% a day, 12% a day, week after week after week. So it's been really hard to set up some positions. And yeah, it's been difficult. However, with that said, that means that this next 20 mod test that we do get, just be prepared for the upside. It doesn't matter if you're bearish or bullish or if you've been getting absolutely decimated this year or not. I was doing really good this year until my fatigue kicked in. And now I'm struggling to even manage my trades. But it's okay. With that said, let's go over the 4-hour chart. I don't know what these are. Oh, that was showing the double bottom and potentially the head and shoulders that was building. But this double bottom did play out. Okay, and again, this is the 4-hour chart. You could follow along on the hourly if you'd like. Now, with this double bottom playing out, that means that this bullish cup has formed, okay? So even though this is a consolidation range, and I'm actually just gonna take it to the hourly time frame. So even though this is a consolidation range so far, this is building bullish structure to head upward. Now, so far, that's not a very deep cup, I'm sorry. So far, what the bulls are wanting from here for the upper Bollinger push is a bearish structure at the top here, and it's not going to be very large at all. Just be aware of that. Bullish structure at the bottom, and looking for essentially a bounce to that upper Bollinger range. Alright, I apologize for that. So again, looking for bull structure at the top, or bear structure at the top, bull structure at the bottom. That can be a very, very small head and shoulders, which potentially we have forming here already. You know, it's not very easy to see on the hourly time frame on my computer, but potentially we already have this bearish structure forming, just needs to come down, build a bullish structure, and head upward. Okay? Now, one thing that the bull or that the bears can be looking forward to is that we are within a consolidation channel. And we did talk about this, how when we were at the bottom of this channel, we said, what's the likelihood? Okay, pulling up. Okay, well, what does this channel like to do when it pulls up? It likes to pull downward. So very, very likely we will be seeing some form of pulling back down towards the bottom of this channel if we're going to remain within this consolidation period for a long, period of time. That's kind of just how these structures trade. And let's just quickly mark these all out so that it is very, very visible. It won't be super visible for my colorblind viewers. I apologize. But that's kind of what you can see within the consolidation. Now, will this pull down all the way to the bottom of the consolidation channel? Maybe not. It might pull down maybe only part way. It might pull down the entire way. I have no clue yet. But this is how consolidation channels trade. And once we get to the bottom of the channel, if we don't break out the channel, then very likely we will be heading to the top of the channel. And that's how this will trade until we either break out of the top or out of the bottom. Okay. So simply, just very, very quickly, we do. Sorry, this is the largest cup ever. We do have the cup. Now we're looking for the handle or the breakout to the upside. Now, if you're a bear, then what you're looking for is we have a left shoulder, we potentially have this head, and now if we pull down and start selling, we have a right shoulder. Okay, and let me just draw this out really quick. There. It's kind of what it would look like. Let me mark it in a different color to show the bearishness. Alright, so I think we're all on the same page here. One thing I do want to mention is that the dollar has been pulling up very, very... Sorry, my daughter is having a fit right now. The dollar has been pulling up very, very significantly. Okay, and just going to the daily time frame. I want to draw this channel really quick. A really strong trend line there, but that's not how I draw my channels. So if we don't see this essentially head upward, I want the drawing tool. If we don't see the dollar start heading upward, basically towards that 131, well, 131 cents. Sorry, I'm losing my train of thought here. So we're looking for this to head back upward. Okay, and not that I'm saying I want to be a dollar bull. Dollar bulls usually do not wish the well-being of of many people. I'm just saying this from, are we potentially entering into a bearish stance? Well, when you see the dollar rising, that potentially means that yes, we can start heading upward. Okay, and these arrows have not been drawing well tonight. I do want to show the USD Japan pairing. Hold on. If I could find it, I am very blind. Okay, this is super important, and this is the USD JPY. When this starts getting to that essentially 156 through 160 range, it's very, very, very dangerous. And the reason why is because the Bank of Japan will not really allow the yen to go this low. Okay, when it starts getting this low, they intervene every single time. And just looking at the weekly time frame, they will intervene every single time it gets up there. And what does that mean? Either they will start to sell their treasuries, which very likely they're not going to, because they've been talking about liquidating equity positions instead. So very likely what they will do is liquidate equity positions to buy back yen to pull the price down. And this happened in June, late July, early August of 2024, where we had that very large, essentially black swan sell-off. And that's kind of what we're starting to, I don't know, I don't want to fearmonger, but this is what you have to be aware of right now as the dollar starts moving upward again, as conditions start becoming a little tighter, and we're starting to see that within our yields as well. Sorry, my daughter is just not having it right now. No, we're actually doing pretty good still. The US 30-year is holding its weight. Even with the yield slightly pulling upward within the actual treasury auctions, we're still seeing them hold their weight quite well. So I do like seeing that. Um, VIX so far is still curling upward. As you can see, it's hard to see right now. Let me go ahead and just delete that. So it is a little bit more visible. I'm going to pull this arrow up to the side here. But you can see it is starting to curve upward. Okay, so we are starting to get more VIX spikes. Not that I'm expecting that massive cup to close because that's super unreasonable, but very, very likely we are getting ready to have another VIX, volatility spike fairly soon here. And another thing to look at is the, hold on, the actual, volatility index for the VIX, and it's been spiking a lot lately. Even though that's a fairly consistent thing, the spikes upward have been significantly larger. And what that means is that the interest within the VIX contracts are essentially spiking up very rapidly. Now, this was, let's see, September 2024. This is when there was that very large, what I was just talking about, the carry trade, um, imploding a little bit. But even prior to that, the very large rally prior to that, we would have spikes up to the 135 range, but, we'd be trading fairly, fairly consistently. It's up, down, up, down, up, down, up, down. Now things have changed. um, so yeah, just some thoughts before we close the video. Anything else I want to talk about? Let's just take a look at Bitcoin. Bitcoin did close that really nice cup. Let's see what we got going on here. It rejected the head and shoulders here, which that's super good for the bulls, okay? And the reason why that's super good for the bulls is because now this bearish structure is no longer bearish. It's now a very, very, very bullish structure. Okay, and the reason why is you can see one of the patterns right here, but essentially you have a super, super strong double bottom. From that double bottom, you have a completed cup. From that completed cup, potentially you are already starting to form that handle. And what does that do? That pushes you right up to a new leg. Okay, so see consolidation. Very long consolidation period after that basing move right there. I discussed those a little bit last night. Now we do have a basing move within this range right here. Okay, and I'm going to delete this cup and handle for a moment just so that I can show you sort of the other channel that I'm looking at here before we close out the video. But within Bitcoin, and let's turn this into that, and up in here, we do have again, a major consolidation channel formed here. I'm going to delete this line, we don't really need it right now. But we do have a major consolidation channel here. We did have a basing move to push us into this consolidation channel. So the expectation should be right now until we get a breakout, which again, that cup and handle can be that breakout. But the expectation should be that we will continue to head up and down within this channel until this either breaks above or below. So, okay, that's going to be the video for tonight, everybody. I hope I covered enough. Sorry, I'm on a random train of thought right now. Bonds look really good. I hope everybody's been getting TLT calls. They look so good right now. I know mine are up quite a bit. Know many people that have been entering those calls for December are up quite a bit. So that is very awesome to see. Yeah, we're gonna end the video here. I hope everyone has a great night. I'm still really trying to focus on recovery. I have been doing absolutely terrible with my health in terms of my fatigue. It's just been making the everyday tasks impossible. Yeah, so I appreciate everybody taking the time to watch my videos. I appreciate everyone who takes the time to subscribe, share them, follow my posts, everything else, and to, who has been supporting me. And I'm not talking monetarily, I'm talking just being here. Um, thank you all. It means a lot more than you know. With that said, I hope everyone has a very safe trading day tomorrow. I hope that y'all do very, very well. I will talk to you in tomorrow's video, and take care, everybody.